Hi, I'm Jennifer Beeston with Guaranteed Rate Mortgage, and today I want to talk to you about 3 things you need to know about FHA if you're looking at getting an FHA mortgage. So the first thing is that FHA has mortgage insurance no matter how much you put down. So a lot of people assume that, well, with a conventional loan, if you put down 20%, you don't have mortgage insurance. So with FHA, it must be the same. Wrong. FHA requires monthly mortgage insurance regardless of how much you put down. Now, depending on how much you put down, the time that you have to have the mortgage insurance varies, okay? But it's not short. So for instance, with 3.5% down on FHA, you would have mortgage insurance the entire loan unless you refinance. Okay? And that's generally what people do is they get into their home with FHA, and then as they pay down the mortgage or the equity increases, they refinance into a conventional mortgage to avoid that mortgage insurance. Okay? But if a lender's telling you, well, you put down 20%, you don't have mortgage insurance, that's not true. So you want to make sure you check. Okay? That's the first thing. The second thing is people assume that all lenders charge the same for FHA mortgages. Since it's a federally insured loan, they assume the government's setting the rates and then lenders just do the loans. No, there are huge price differences with FHA mortgages depending on what lender you talk to. We did a secret shop recently and we actually saw as much as 1.25% in rate difference based on what lender you spoke to. Same exact scenario, shopped at the same time within a 2-hour window, which is how you want to shop rates, 1.25% based on what lender you talk to. So if you're looking at an FHA mortgage, please compare rates. Please call me. It is one of my favorite loans and I know how competitive we are. Let me show you a second option for rate, okay? And the third thing you need to know about FHA is that FHA is a great door opener. So I like to use FHA as an example in areas that are high cost. So a high cost area would be like San Francisco, Alameda, Contra Costa. And you can't do 3% up to the conforming high balance limit. You can only go up to the current conforming limit, which is 484, I want to say 150, with 3% down. But the FHA limit's much higher. So in San Francisco, it's approximately $726,000. So you can go up to that amount with 3.5% down with FHA. That's a great option. You know, it can be super hard to save money, especially since rents are increasing faster than housing prices. So FHA can be a really good option there. Another good option is if your credit is less than perfect. So with FHA, you're going to have much better monthly payment than a conventional mortgage if you have a low credit score. So FHA can be a great mortgage. You just want to make sure that you understand that it has mortgage insurance, you shop your rate, and then you know some of the benefits. So if you have questions or comments or I can help you out with an FHA mortgage, please feel free to reach out. I'll have a link in the comments below where you can look up my FHA rates or ask any questions. Thanks for watching.